Hello, it's Cameron again. Just I didn't make a video last week because the market conditions were mostly the same. I was debating making a video on a specific company, but I didn't really have much time, if I'm being honest. Um, but anyway, um, so this week we've seen the outcome of the Ukraine stuff, and uh, essentially once they invaded, actually stocks went up, which is something I'm going to get into a bit more. But also, I wanted to talk about more about the Fed because I haven't really spoke about them much, or as much as I'd like to. I've mostly been looking at Ukraine. Um, so yeah, so talking about the Fed, they obviously don't want to get too aggressive when there's lots of volatility, um, and I believe that most of the stuff had been actually priced into the market. Most of the stuff on Ukraine. So I believe people thought that Ukraine was going, America and the rest of the world was going to have a lot of tougher response to Russia, and whether they thought it was going to be sort of a bigger war with lots of troop commitments and stuff. Whereas I think on the Friday, no Thursday, yeah, on the Thursday when they saw that it was actually sanctions and stuff coming through, and they realised that it wasn't going to be that sort of big commitment. That's when you saw the market rebound. Um, but yeah, I basically just think the markets had priced in a much more aggressive response from Ukraine, which is why we saw them go up. And I do still expect there to be lots of volatility in the market, mainly because there's lots of speculation about whether the Russia-Ukraine conflict will be like a really long one. Uh, yeah, so I think it will be. Most people have been talking about. Oh gosh, Wi-Fi's gone. Yeah, they've been talking about how whether it will be they're saying it could be up to 5 years. So yeah, that sort of things. Next thing I wanted to talk about it is mainly the Fed. So I feel like not most of the Ukraine stuff has been sorted out. We're still going to see a lot of volatility, but I think it will mostly be going up from here regarding Ukraine. I don't think the situation will get worse to the point where America will send in troops. I feel like if they were, it would have been they would have pulled the trigger when Ukraine was actually invaded. So I feel like most of the volatility in the market from that, most of the negative pressure from that has already been priced in. However, I do want to talk about the Fed hikes. So in response to that, um, uh, Cleveland Fed president said that it will be appropriate to move the market rate and follow with further increases in the coming months. And there was one part she said about how yeah, close. I think that we continue with our plan, lift-off plan, basically, which means I do still think she's going to price stuff in. I think oil hit over $100 a barrel, if I'm not wrong, or it will do soon. And I believe that that signals like even further inflation. Obviously, like oil isn't just what you get out at the gas station. It's involved in transportation, it's involved in loads of raw materials, and I do think that once those get priced in, it's the price of the price of stuff is just going to go through the roof. I don't think it's going to hit 10%, as a lot of analysts I saw were saying out there. I don't think it will be that high. But yeah. So yeah, they're going to be more. Essentially, I was expecting the Fed to be more dovish, if I was being honest. Essentially, like there was two arguments in my head. Was obviously inflation's about to go massively. Like they need to do something about the rate hikes, but then also they're balancing that with they don't want to cause a recession because um, by increasing the rates too high too quickly. So I think that's basically just been the balancing act they're doing. But the fact that their inflation is now going to go even higher, I definitely believe we'll see at least something, probably 25 basis points. I don't think it'll be 50. I'm being honest, considering the past events. But yeah. Um, Oh yeah. The last thing I wanted to talk about was my response and what I've been doing with my portfolio for the last week or two. So following my last video, I did say that I would be dollar cost out. I was waiting for um, Russia to invade Ukraine because I thought all the signs were that they were going to invade Ukraine. So I was holding off on dollar cost averaging until they did invade. So I started that on Thursday, and that's gone pretty well. I've only made one. Well, I've only bought it once so far. I like to set them a week apart. Was sort of what I was told to do. Um, but yeah. That's been using the Vanguard VOO index for the S&P 500, so I've been investing into that. I might talk a few more about some of the other stocks that I think I'm going to get into, mostly like Alphabet and Amazon. I think are some safe ones that I'll be going for. Last thing, yes, I've also started dollar cost averaging into Ethereum, which I believe is like a really stable cryptocurrency that I can see going much higher into the future. That's mainly because I've been studying fintech. One of my modules is fintech, so I've been learning a lot about that, and I've sort of become a big fan of that. Yeah, I think with sort of decentralized finance and the growth that it's going to have, and sort of especially with gaming and stuff, there's a lot of current cryptocurrencies that are derived off of Ethereum. I think that Ethereum will should go really high into the future. Yeah, with things being built off of it. But yeah, that's my talk for this week. Thank you very much for listening, and I think my next video will be about some more individual stocks. But yeah.